This video continues now from the video 1 on the Matty Collector example that we would have done in class today, but there's unfortunately the disruptions on campus. So you would need to watch that video 1 first before proceeding with this video. In this video now we're going to do the finance lease lessor for Matty Collector, which was part A of that question that you did in class the other day. The first thing we're looking at now is Matty Collector has sold a machine to Upstart Toys. So Matty Collector now has done an asset disposal. So we're all familiar with the entries for that. And in the given information, the machine's cost was given to you at $192,000. So we'd need to take that out. Now the journal that I've just started completing there, that's the journal that you're going to be required to do using the South African interpretation of the journal entries, and as it'll be marked in your assessments and things. But just on the side here, just keeping in mind the international version of this journal is a little shorter, and I'm going to keep running with it just that you can keep the comparison going. But again, please remember, we in South Africa work with this gross investments and unearned finance income. At this point, maybe it's prudent just to also mention to you, I've had questions on what kind of account is unearned finance income. Well, quite frankly, your guess is as good as mine. I think if you ever had to answer a theory question on this gross investment and the unearned finance income, I would probably make the comment to start with that these two accounts need to be viewed together as they're essentially representing your finance lease debtor, and then to discuss it as a net figure for your finance lease debtor, which would obviously go into your asset definition in the conceptual framework. I think it's very difficult, especially for the unearned finance income, to discuss that as being an element in the financial statements. Right, back to the asset disposal. We've transferred the cost of our machine out now at 192. The question went on to say that the carrying amount of this asset was 120,000. So the 192 minus the 120,000 means the accumulated depreciation at date of sale was 72,000. Again, I'm putting it into the International Journal on the right of your screen and the South African interpretation on the left. Now we need the proceeds for this journal. Well, in the information that's given to you, it tells you that this asset at fair value was 200,000 on the date of the sale. So it's safe to assume that that would be your proceeds for the sale of this, and that your debtor would be owing you 200,000 Rand on the day of sale. This is a little harder to see in the South African interpretation, so I'm going with the international one just to show this to you to start with. So you've got your proceeds there now. You've got your carrying amount of your asset, which would be at the 120. So in other words, we're making a profit on the disposal of this asset, we being Matty Collector, of 80,000 Rand. It's a lot harder to see that in the South African journal though. Here we need to now just take another step or two. We in South Africa recognize this gross investment, which essentially is all the payments that you're going to receive on this finance lease. And remember, working with the lessor accounting, he takes into account the guaranteed and unguaranteed residual value, which was given to you in the question as 40,000 and 30,000. So my total residual values here is 70, which we'll be receiving in future. And then the annual payments, there's 5 of them of 50,000 Rand. So adding all that together, you'll be getting a total gross investment, in other words, total payments receivable on this over time, of 320,000. The problem is those payments now, obviously, because it's a financing arrangement, this include not only capital but your interest as well.